Thank you, everyone, for joining Joint Custody or regular podcast these days. I'm your host, Benjamin Duve, former central banker, banking executive, and now global head of partnerships at GK8 by Galaxy. And I'm very pleased to welcome Deborah from Citibank today. Thanks for joining, Deborah. And maybe give a little bit your own introduction about what you do at Citibank.
Thanks. Thank you, Benjamin, for having me. A pleasure to be here. So my name is Deborah Querub, and I run digital assets for Citi Wealth. We've been in this role for about 3 years. We started the business here, and what my team does is they're responsible for advancing digital assets products and services within our wealth division. And we also try to drive the implementation of new capabilities that our clients may want, but that is always consistent with our overall innovation strategy. So we also actually drive our thought leadership as well and our education for both our clients and the field, which is basically our private bankers and the advisors.
So you obviously seem to be a very interesting person to have on the podcast. We also see that a lot of people signed up to listen to you. Now let me ask you a very interesting question many people have. How did you get into digital assets? So what's your personal story? How did you end up being in that future of finance field?
Yeah, so my journey, I always say this is always a journey. So my journey started quite a long time ago, over 10 years ago at this point. And at the time, I started my career at Goldman Sachs, and I was working on the foreign exchange department in sales, but particularly my role was to digitize FX. So a lot of what I would do, I was based out of London, originally from Spain. I was based out of London, and I was covering a lot of the southern Mediterranean countries, so Spain, Italy, Greece, Cyprus, Turkey, Israel, the best regions, basically. Strategically done, obviously, because of the food. And part of the reason I would go, especially to countries like Turkey and Israel, and they were very much in tune with what was going on, right? Like they were prone to inflation, they were prone to central bank interventions. They understood, what volatility meant. And so they were very much in tune with what was happening. And while we were trying to automate FX as much as possible, which basically meant converting some of our existing clients that were trading traditionally what we call voice, which is like you'd pick up the phone and ask for a trade, and then somebody would like get that done. We're starting to move them to an electronic trading platform. And what we're also doing is actually acquiring a lot of new clients because now we actually had the capacity. So it was a lot digitizing FX, democratizing FX, and it was great, right? Like our clients were very receptive to this, and they were like, great, like I can finally do my trade. I get my confirmation automatically, which I know now sounds crazy, but at the time it wasn't the expected outcome. It gets booked directly into the risk management system, but I still have to wait 3 to 5 days for my money. And so that was always the question that I would get is like, how are you solving that? And the answer is we just didn't have a proper way. And so it was actually one of my times in Israel when I started to hear about Bitcoin. And at the time, it was only Bitcoin. It was like 2012, 2013. And so I started to get quite curious about it. And we ended up having like a deep dive with some of the forefront people thinking about the space. And they gave us like a big overview of like what it was and what it could do. And I remember getting out of there and like my mind had been blown. And that leads you into like a little bit of a rabbit hole. And for the next few years, I was very much part of like working groups, both at Goldman and then when I moved over to Citi, on trying to figure out how to connect the TradFi world with the DeFi world and really be able to, our clients, they wanted access to crypto, but without having to have the difficulties of having actual crypto through like managing their own keys and hosting their own wallets. And so that was like the extension of what we're trying to do. And then eventually when this role came up in the previous cycle, to actually start the business full time and figure out how digital assets actually could be embedded into the fabric of wealth business, I jumped into the opportunity, and that's when I did the full pivot. So I know this is a long answer, but it's been a long journey. And like also what I like to say always is like I just love the space and I love the community because everybody has their own story and everybody comes from their own side of the world. Like I come from FX, but there's so many people who come from different areas. But there's some things that are common to everybody. And it's like this deep intellectual curiosity. You have to have gone through that rabbit hole and spent a lot of time on the space. This conviction of democratizing finance and making it more open and less friction, but also have a little bit of resilience and a little bit of like love for chaos in because it doesn't go away. Like it keeps getting chaotic. And like one of the things that I always say is like at the beginning, 3 years ago when I started, people would come to me and they're like, "Oh, you have the coolest job." Then the bottom cycle and they come over like, "I'm so sorry you have this job." And now we're back to this is the coolest job again. So I think we're
The
back
side
in a
note, you
good
could
place.
also do AI. You could also do AI, right? I
I
mean,
could have
you want
pivoted,
to jump the ship
but no, I stayed
these
strong.
days and you jump the ship and just go to the next cool thing, and that's AI, right?
Exactly. No, and AI and digital assets are very much intertwined. So
That's
we'll
true.
just add it up to the pile of things.
Yes, I did that myself at BNY. I was part of a AI digital assets leadership team. So we had the AI component, but I didn't know how cool it would get down the road, to be quite honest. It was already quite cool then, but it was before the ChatGPT moment,
Yeah.
right? Before it
Here
like
we
really,
we're keeping it separate from the front end and the back end. So like our risk, enterprise risk or compliance teams are actually both looking at both of both spectrums, really because they're looking at it from like new technology perspective. So
yes.
I
It's
agree.
the, but when I hear your story, it resonates, right? Because I think a lot of people did this, right? A lot of people went ahead and found a way in because they touched it in their traditional banking. That's the banker's side, right? And then I see a lot of crypto people go more towards the institutional bit because they understand more and more about crypto investment opportunities and all of these other things. And in the end, then you also come into that space in between institutional or even going to a bank to do crypto or then go back and so it's like two areas you can come from. Traditional banking, you touched it by
Yep.
coincidence, or you're in crypto and you suddenly touch banking and then you get lured into that rabbit hole. But I
Yeah, for
think
sure. And it's going to continue to intertwine and collapse, really.
it's a convergence. I always have that feeling. It's a convergence, but I still think there will be a niche of that El Dorado crypto world that will stay. It's um, like in other areas, you have very risk on areas in, I think, almost asset classes, almost all asset classes. And crypto offers that opportunity to have like a really completely walled, sealed off garden for it. And that seems to be an interesting perspective. But I think that's not the area you guys are focusing on, right? So I think it's interesting for me to understand that there seems to be this strong interest among players in wealth and with Citi also major QSO players, right, who really look into crypto and digital assets. And why is that? Why is suddenly this push
Hmm.
for wealth and private wealth rather than just before it was more an institutional play, right? Why is a strong push there now?
Yeah, no, so I mean, there's a few reasons, and it's not surprise, right? I would categorize them in really three buckets. Like one is the maturity of the industry. The other one is, strong client demand that is coming on the back of that. And lastly, is the policy and regulatory environment. And honestly, I'm going to start with that one because it cannot be undermined and underestimated. The 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 push that's happening, right? Like we're in a different regime, and what we've seen over the last 6, 7, 8 months is really transformational. Like it's been especially obviously coming from the US side, but Citi is a US bank, and so that's really what governs us the most. We have to sort of keep a track of. But there's been a real 180 in the sentiment, and some people say it's not just that there is now a pro crypto president; it's actually a crypto president, right? So it's a really big difference, and and they're moving very fast. And what this president has done is, one, they have appointed very quickly pro crypto and pro digital assets um, heads of regulatory bodies, as well as like the crypto czar that he's created. But also the regulators themselves are moving really fast. And so, I'll just single out a few milestones that have really made that strong interest actually convert into action. And so, for example, the most important one at the beginning was in January when the SEC actually rescinded what they call sub 121. This was the guidance that was given for banks that were still was preventing them from being able to have crypto assets on their balance sheet. With this guidance removed, it basically opened up custody to banks. And so it wasn't, but this had already happened like 4 years ago. And a lot of the banks were already very much deep into actually having a custody solution, which they then, as you know very well, given coming from BNY, they had to like shelve it for some time. And so the fact that this was removed, it really opened up the rails. But the fact that now banks are able to custody these assets means they have to be able to put them on the balance sheets. They can operate in public blockchains as well, which just wasn't they didn't just have the option before either. And so that one was fundamental. The other big milestone has been the passing of the Genius Act by Congress around stablecoins. Stablecoins themselves, we see them as a very important um, part of the ecosystem. It's almost like a Trojan horse in a way, right? It's that bridge
Very
between.
tricky for banks. I have a very distinct opinion on how good or bad it could be for banks. But if you look
Yeah,
at the wording around it, it's basically, it suggests you could circumvent banks as the key player a client has to interact with to use stablecoins, self-custodied wallets, and crypto or digital assets and interact with them without the need of a bank, right? All through that
yeah,
stablecoin.
but we'll see, right? Like at the end of the
Yes,
day, the bank is something that is very important, which is the trust, and
yes,
the there is always going to be trust plays. Like maybe some people are going to be able to transact by themselves without having to the trusted party having to confirm that transaction, but there has to be trust in making sure that smart contract is doing what it's meant to do, right? So
yes.
like the trust portion, it doesn't mean that it goes away; it just gets moved to a different part of the transaction
I have a
process.
lot of conversations around that because there are people who suggest you can, right? So it's a complete
No,
different
and you definitely
discussion.
can,
I
and you
fully agree.
should. It just doesn't mean that everybody wants to.
No.
And when you're talking about huge institutions who are also subject to a lot of the regulatory, um, constraints that big banks like that are, they just aren't ready to not have those guardrails, right? And so that's really what big institutions like Citi are able to give to the table. So I'm not saying that people can't just go and do it, and they probably should be able to go and do it without having to have this separate. We're all talking about like opening up the system, but it's not going to be for everybody, and that's really where we're trying to create our niche there. But regardless, like I think there's still a lot to see in how that's going to play out. It just means that before we just like banks were just totally outside of the conversation. Now banks are now able and financial institutions are able to be part of the conversation once again, right? So whether it is through managing the reserves or custodying the assets or actually issuing a stablecoin, which haven't necessarily been decided, if there's even a need, all that thing is going to play out. But it starts there. It starts on the regulation clarity, which now we're starting to have, which we didn't have before.
And there's client
And then
demand, right? I
exactly,
think
and
that's
then
the key difference from before. You have now key client demand.
yep,
So you have regulatory clarity, but you can make money. And then suddenly
exactly,
it gets much more interesting because it's not cheap, right? You have to invest, you have to change processes.
yep,
You
for
have to
sure.
do a lot of changes within a bank and with the demand for crypto first, maybe, but then other use cases as well. It creates the ability to create revenue, right? And I assume that drives decision making.
100%. And I was just going to finish that part saying that also what the SEC and the CFTC working together and collaborating in the space through Project Crypto and Crypto Spring is also something that we're following. Also, the beginning is still very early, but it's very good to see this progress and bring this clarity to the ecosystem. But to your point, that maturity and access that you're saying about is something else that like why are individuals interested now? Why are banks looking to stay? It's also the maturity. There's the ETFs. The launch of the ETFs and Bitcoin were a huge milestone for the ecosystem and really what spiraled a lot of like the last cycle. And part of it is because this ability to access, to my point, it didn't mean that institutions weren't able to just go and buy crypto or Bitcoin itself, right? It just meant that now there's an actual traditional finance product vehicle that gives you that access to actually be able to be exposed to crypto without having to have all that other extra factors that nobody's ready to do, like self custody or figuring out the custody piece of the Bitcoin itself. And so, we saw it, right? Like we saw the launch of Bitcoin ETFs was unprecedented in terms of demand. It's been the most successful launch of ETFs in the history of ETFs, right? It reached 100 billion in AUM in less than a year. Whereas like I was looking and it took like gold, which is probably like the biggest comparison when gold ETFs came out for the first time, it actually took about almost 10 years for the gold ETFs to actually reach that point, whereas like Bitcoin did in 1 year. So it was unprecedented. I don't think it was even expected that it was going to reach that level of interest. And part of it is that access that I was saying. So it was interesting to see because I think the community was divided. On the one side, you're like, well, you're centralizing a lot of like the ownership of these assets, but at the same time, which kind of goes against with a lot of the ethos of Bitcoin in general.
Well,
But at the
yes.
same time, people realized you need this. Like that demand needs to exist there, and that access needs to be there for players that actually want to be able to do this in the way that they've done it their entire careers as we progress into the future. So that's been very interesting to see. And then lastly, obviously, has been client demand. Like, why are we getting into the space? Is because our clients want us to, and
I
because
always
yeah,
suspect that's the main driver because in the end, banks want to create revenue and keep the clients in the long run. I
yeah,
think
for
that's
sure. And I think it goes beyond that, right? Like it's not that clients weren't asking us about this earlier. It's just that we just didn't have the clarity to be able to do that.
yes.
And we're still early again, right? Like we're still not necessarily advising in the space. That's sort of like the North Star. But, when we think about what our clients want and as we position ourselves to the future is they want a multi-asset, they want multi-bank, they want cross-border, they want always-on solutions in payments, in financing, they want liquidity, they want access, right? And so as we think about like what our clients want and we think about what blockchain technology is able to deliver, those two are combined. And there's some stats that we're seeing, not necessarily ours, but like externally, and we're seeing that 90% of advisors received a question around crypto last year. Um, and so
That
as
means just that if you look at the age, the average age of people who actually have an advisor, right? And 90% of that means
yep,
it's not the 18-year or 20-year-old who's asking, but it's a very different age group. So it's very interesting progression. When you take all this into consideration, how do you see the short-term opportunities versus the long-term ones, right? Because you mentioned a lot of the different
yep.
topics that are in the industry. How do you see that? Maybe also from a personal perspective, how do you see that? What is a short-term quick win thing, and what is more a longer-term opportunity for the digital assets ecosystem overall?
Yep. So overall, the space, which again, as we've mentioned, still relatively new, is very much in line with Citi's overall strategy and commitment to innovation. Like there's a reason why the bank has been around for over 200 years, and it's because they've been able to evolve and innovate. And we want to continue to be there for another 200 years. So we need to be a part of this strategy. And so when you think about what we want, we see digital assets as a very significant part of the future of the financial system and has benefits like what we just described, like these efficiencies, like faster processing, greater transparency, which our clients are asking us for, but we really need to be able to deliver as well. And so our goal is to do this, but in a safe and sound manner. And so that's where we need to be paced and think about like the governance part of the equation as well. So overall, to answer the question, like our overall strategy, like we think about digital assets in four different buckets. So one is around digital money. So like delivering new products and capabilities in digital money, digital securities, right? And collateral, like the movement of collateral as well.
It's a
Four
very
is,
interesting use case. That's one where a
yeah,
lot of people
uh,
see it. And there's so much revenue opportunity in it. That's why it's driven so strongly
yeah,
in
for
the
sure.
narratives. I think
There's a lot of assets that are not moved or leveraged,
locked
right,
assets.
for any other
Yes.
purposes, and that's definitely going to be a huge unlock. Um, then obviously like new assets, right? So enabling new assets like crypto, like we see crypto as a new asset as a class eventually, and then lastly, enable new networks and technology. So that's at the end of the day, this is what it's all backed for. So when you
What's
think
the
about
very short-term one, right? So let
so
me.
well, I wouldn't say it's short term. I think that's going to continue to evolve. But when you talk about the short term, like what we're actually doing, we're very connected within the whole bank. Obviously, cover specifically focused on this on the wealth side, but the institutional side of the business is been very active for quite some time. So short term, we're focused on the movement of cash and relieving a lot of the friction. And so, for example, Citi actually launched what we call Citi Token Services, which is our tokenized platform for deposits that is always on and 24/7. And so the interesting part about that is that they're really interested in the user experience of that product. So our clients are able to move these cash seamlessly without necessarily knowing that the underlying technology is blockchain. And this is how we need to build in this ecosystem. And so that would be one side. The other side is our server system have said it, right? Like they're deep in working on ensuring that we're going to end up having custody for crypto assets, stablecoins, tokenized assets. So that's definitely being worked on short term as well. On the wealth side, our clients are asking us for access of crypto, and so we're figuring out that piece of the equation. But there's a lot more, right? Like I keep thinking like on the long term, more long term, I keep thinking about my North Star. And the North Star is really to be able to have full-fledged advisory business conversations with our clients, where when you're talking about their portfolios and portfolio optimization, crypto is a part of that conversation, which
Just a
may not
regular
necessarily
asset
be right
class
now.
in the mix, right?
Exactly. And it's like for those clients that want it, right? But what we're going to say, and it wouldn't be a bank if I didn't say this, like the caveat is we're not going to do it if there's no clarity. We're not going to do it if we have full support from our regulators. And so we have a lot of those conversations well ahead in advance before we move on to whatever it is that we're going to build. And I would even add that the toughest part of my job is not necessarily the technology aspect of it or enabling a lot of these capacities, is the other part, is bringing the whole bank with you into this journey and ensuring that they're bought in into the strategy, but also that those frameworks and the governance structures are put in place. And that takes a lot of time and effort for all of us. So at the end of the day, you're sort of like advocating slash educating while at the same time driving the business. So, kind of like driving the plane while building the plane is sort of like what we're trying to do here at the same time.
So we have I have to ask the next question. We said we have a very large audience who's listening, a very diverse, interesting audience who's listening. It seems to be people want to know what the large players like Citi are doing, and I think wealth is one of those interesting areas. You just mentioned big push from your perspective is into governance, is into setup, and so on. But there's a whole technical aspect to that infrastructure, right? It's always interested because you come from a wealth business, right? As a wealth business, do you do that yourself? Do you first use your own infrastructure or leverage external infrastructure and then
Mm.
buy in, build in, help influence the Citi crypto and digital assets infrastructure build? How do you do that? Because if I see it correctly, what you described in more immediate wish of clients to access crypto might not be in line with the build strategy the broader Citibank has, for example, or does it, right? And it's very interesting to know and to understand that how do you make that a success for you as a business?
Yeah. No, and it's obviously an excellent question. And what I would say is it has to be a multifaceted approach. Like it needs to be a little bit of both, right? On the one side, Citi is trying to build and develop our own internal infrastructure. We have, I mentioned Citi Token Services. We have also what we call CDAP, which is like Citi Integrated Digital Asset Platform, which is kind of like our mainnet. And that's already operating. But at the same time, we need to leverage and we need to partner and make sure that we're doing this and learning from the best in class. And that a lot of that we can do is comes from the experts in the ecosystem. So it's definitely going to be a lot of partnerships, and when Citi likes to do it, it was similar to like how it happened when fintechs sort of came around, right? It wasn't a lot of the people used to say it's like, well, it's either going to be the fintechs versus the banks, but the reality is fintechs and banks ended up being very integrated. Like some services were given by the banks to fintechs, some fintechs were giving services to the banks as well, and so I see this relationship evolving in a similar way in the digital asset space. So, the things that we care about, we're going to go and try to find the best in class that deliver those, and then see how we can partner with those ones to be able to continue to offer the best experience for our clients. So whether it is, simplicity and integration and the user experience, or enhanced security, data protection, right? Or standardization, like that's something that we don't have, that's something that we need. Like everybody, if you start creating in silos, then how are you making true the promise of interoperability, which still kind of needs to be solved, right? So there's a lot of things that we're not going to be able to solve by ourselves, and we're not going to be able to build by ourselves. It's going to be very important to do it in collaboration with the best in class and the industry as well, as we move and continue to innovate towards what we're all trying to achieve here.
We are shortly before the end, right? So one question, being part of Galaxy and being a crypto and digital assets custody solution, I have to ask, what role do you think will crypto play in wealth over the next years, right? And it's not only the city, but also your personal perspective, because you guys already start to think about it and move in that direction, but others aren't. And the real question is, can banks afford to ignore it?
Yeah. So listen, I know we have 1 minute, but like what I would say is Citi believes that the future of networks is borderless, it's multi-asset, and is always on. And so that's really what we're going to work. And so as that continues to evolve, digital assets and crypto will become a more significant part of that conversation and of a conversation with our clients as well. And especially on the wealth side, we expect crypto to be an even more significant part of what we think about holistically of our clients' portfolios, right? So I've mentioned that one before. Overall, the crypto landscape, as it matures and the financial services become more complex, more digital, more automated, the role of the trusted advisor becomes more critical, and it's more critical every time. And so I would finish there that I generally think that's eventually where we add our value is towards our clients. We know them, they trust us, and we want to be able to be there for them for years to come, at least another 200 years.
That sounds pretty good, and you seem to be on track for that. Thanks so much for joining. The time went by so fast. We could talk for another half an hour or more. Thanks for joining. Hope to connect soon in New York, maybe also in person. And thanks to the audience for listening in. I hope you join one of our next podcasts as well. And I'm sure Deborah is happy if you connect to her on LinkedIn or reach out if you have any questions or follow-ups. Thanks a lot, everyone. Have a nice day.
Same thing. Thanks, Benjamin.
Thanks, Deborah. Bye.